All right. What's up, team? How is everyone doing? How is everyone doing? Welcome, welcome, welcome. Good morning, good afternoon, good evening. Good evening as well to a lot of people, I imagine. Let's see. All right, perfect. There it is. I need to print that on a shirt every time. Every time I record, I need to wear that. All right, perfect. Hello, how's the morning going for you? Very well, my friend. How is your morning, or how was your morning? How is everyone doing? First time catching you live. Welcome, my friend. Welcome. Happy to see it. Happy to see it, my friend. No sound. I hope the sound is working now. I imagine it is. Thank you, Trey. Thank you. Are you ever going to do videos on order flow? That's a difficult one. I never say no, but I'm not sure. For now, no, not specifically on order flow itself. No. What's up, Zeus? How are you doing? What is up? My favorite trader, I'm idle. Thank you. I appreciate that a lot. Thank you. Thanks for the sheet you provided for us. It helped a lot. Thank you. Well, thank you. My pleasure. No worries. My pleasure. It's the least I can do. Hopefully it is helpful. Hopefully it is. WWE headlines. Of course, I remember you, my friend. Of course. It's arguably one of the most recognizable names here. WW headlines. Of course, my friend. Of course. The background of you looks so clean. Thank you. Yeah, I had quite a few comments actually about that. It's quite nice. Quite nice to hear. Love that. Can you record some live trading, please? I can. It's not that exciting though. There's the way I currently trade is to give you a sketch. Is I'm mainly looking at the higher time frame. Then I enter off of a 4-hour daily candle or the 1 hour. So there's a lot of time between it. So it's not like where a lot of traders who just come into the industry, they think, okay, you open a chart at maybe 8 a.m. and there needs to be a trade opportunity. It's just not the case. And so yeah, there's a lot of time between it. And most of the time I'm just waiting. So if I actually do a live session, then arguably nothing will happen. If that makes sense. Will there be a live of this live session? This is all recorded. As in, this gets uploaded automatically on YouTube as well. If you go to the channel and then go to the live section, the live column thing, you'll find it. And there are all the live streams. Or in the playlist as well. I put them in the playlist. Trust me, live trading with Ario is mad boring. We just end up talking about other stuff. That's very accurate. And Zeus knows. Zeus is a support member in the MMT. Yeah, it is. It's very boring. As in, it's not like I'm actively looking to trade constantly. It's a lot of waiting. It's more waiting than actually doing something. The live sessions, usually, it's a good comparison. The live sessions are arguably longer than the actual trading amounts. If it wasn't for the live session, I wouldn't even be looking at the chart. It's very funny. No, it's no hate at all. No. I understand. For sure. It's very funny. My actual trading days are maybe 30 minutes maximum looking at the chart. Are you sending me your address? I don't think that's a good idea, my friend. I appreciate it, but I'm not sure if that's a good idea, especially in Colombia. I'm not sure if that's the way to go. Let's see. How long will the live be? No idea. It depends. Today, there's a few things that I want to do after the live session as well. So that usually depends how long it actually is. Other than that, if the great questions keep on going, then we'll be here forever. No. Let's see. How's your Spanish been going? Quite all right, to be honest. As in, I understand. Well, what the conversation is about, I could already understand. I can now understand quite well if it's about us, about you, about me, or something like that. That goes quite well. But yeah, there's still some way to go. But it's better. It's better. It's better. For sure. For sure. Yeah, there's actually quite some updates as well about the MMT that I want to give. Because I got a lot of questions, and we get a lot of questions about will the MMT open up for the monthly again? And yes, it will open up, but there will be a whole repackaging of the MMT. As in, not the concepts and things that we use, but think of a new website. Think of indicators, for example, that we're actually currently working on. So the previous video that we made on the probabilities with the arguments, that can be fully automated. That is an indicator that we'll have, for example, for the masterclass. Then also, a cheaper package will return as well, to make it more accessible for other people as well. So that's actually really interesting, and that will actually hopefully soon as well return. Very interesting. Very interesting. So yeah, just to clear that up. Your house is being, please give a tour specifically, especially that scenery behind you. Well, the scenery behind me is just, that's the garden of the house. Other than that, it's, this is the office. I'm in the bottom floor. We have one more floor and one more floor up as well. That's about it. That's about it. Is your girlfriend a trader? No, she's not. No. I'm happy she isn't, to be honest. As in, if outside of work, I would also have to answer constantly trading questions. Come on. Looks peaceful. It is. Very peaceful. Very, very peaceful. What about your prop firm? Prop firm is also on the way. We're waiting for one more external party, which we just can't, we simply don't have any control over that right now. But then it's the green light, essentially. The green light, yeah. Yeah, you can't, Zeus. You can't make the same jokes. No. The YouTube community guidelines will come for you. Fun and Friends is launching. Well, we hope. Well, June is. That's going to be tricky. Hopefully July. Again, we've been pushing it back a little bit because we've been waiting on an external party as well, and want everything set as perfect as possible, of course, before launch. But we hope soon. It's been long in the works right now, so we hope soon. For sure. What's the spinning ball behind you? Is that your trading secret? Yeah. This is the magic Enigma here. You buy this, it's Enigma. You'll win all the trades. No. It's just it's a spinning moon. It's a spinning moon. I thought it would look fun. I thought it looked fun. What's the difference between ICT and SMC? It was actually very interesting because I see some people say SMC is supply and demand, which there's some truth to that, as in I've been involved in both those things. But I always thought actually, and I've heard ICT mentioned as well, ICT is the creator of SMC, as in ICT is the creator of smart money concept. So ICT and SMC is the exact same thing. That's what I at least thought. Maybe I'm wrong, but that's what I thought. But SMC sometimes is nowadays also referred to as supply and demand. But when I refer to SMC, I personally refer to ICT as well. Quite interesting. Dollar will keep going higher. Let's actually dive into that. Afterwards, we'll go over different questions as well, of course. Feel free to ask anything you want, essentially. Unless it's really out of pocket. But let's dive into that. Let's dive into the dollar going higher as well. Let's see with this one and this one. Perfect. Full screen for this one. All right. So we had some interesting price action in this previous week. And the forecast was essentially quite accurate, which I'm quite happy with as well. I'll try to put as much reactionary levels into the forecast as possible. And what I mean by that is a forecast, if I just forecast, well, I think we're going higher, that's very useless essentially, because I think there's a lot of reactionary levels. As in, if we reach a swing high, we need to run that to continue higher, for example. And that is what, if we do a forecast like that, then everyone can also learn from that, I believe. If I just tell you, well, we might be going here, yeah, it's not really that beneficial. Now, on a dollar, if we take a look, and we quickly take a look at the economic calendar as well. Let's actually take a look right here. There it is. All right, we have Monday, US dollar FOMC member Waller speaks. Not super interesting. Then Canadian dollar news right there. We have some Canadian dollar CPI. Okay, so definitely some volatility coming into Canadian dollar. Then we have some more US dollar REVOL news. That's very nice. New home sales. Okay, REVOL news right there for US dollar as well. Australian dollar, US dollar, New Zealand dollar bank holiday. Okay, decent price action right here. Nothing too crazy, nothing too much to worry about right here. So it looks quite good. Especially the beginning of the week right there looks quite interesting to me. Now, let's look at the dollar then. If we zoom out a little bit, again, the monthly, when I say a top-down analysis, it's not that I do a top-down analysis every single time I look at the chart. So I don't start on the monthly every single time, because after a while, of course, you will also understand, well, the dollar is still bullish on the monthly. Nothing can really change in that fact. Now, if we do take a look at it, we're still sweeping that swing low right there, or the previous candle low. So that's quite interesting. On the weekly right here, that translates over to that weekly swing low right there. Perfect. Next few targets that we have is this high, in my opinion, and afterwards we also have these highs. But let's first focus on reaching this high right there, and if we can even reach that high. We have a fair value gap sitting right here. Is that, and that's the first question I ask myself, so I'm just speaking out loud right here. Is that a fair value gap that we can trade back into if we still want to continue higher? In my opinion, no. That is not a good fair value gap that we can retrace back into right here to then continue higher. Because think about it, this whole area, and if we think about it from a fair value perspective actually, which might be very interesting to create a video on just alone, a separate video on fair value alone. If we think about this from a fair value perspective, then here we've been pushing higher. So we had this push right there, offering buy side. Now we got this retracement right there. We offered sell side as well. In this leg higher right there, we have already offered fair value. So there's no reason to stay there for a long period of time, unless, of course, price is consolidating. So if price wants to continue higher, then this inside a fair value area right there, and that's what I haven't touched on breakaway gaps in a breakaway gap video actually. So the live streams I always share a lot more nuggets actually than in the YouTube videos, I would argue. But anyway, besides that, in this fair value area right there, this is the area where we create breakaway gaps towards that fair value area high right there. And afterwards we have fair value area, the cycle repeats. Now right here, this is where we create this breakaway gap right there. So for me, that is a breakaway gap. So what does that mean? Again, because we understand we don't want to see a retracement back into that, but what if it does happen? And that's arguably the most important question, because sometimes we do retrace back into a breakaway gap. If you expect it to be a breakaway gap, then don't trade off of it, because most likely we are retracing back into that because we are actually consolidating. So it's a low probability when we do retrace back into a breakaway gap. It's a mouthful, but that's very important to understand, because then you're not getting caught up in a consolidation right there. Very important. Okay, so this weekly value gap right there, essentially irrelevant for now. Then we have this daily value gap right there. And last week we came into that daily value gap right there. We had bank holiday, took a while because the volatility was not that high. Afterwards, we had a beautiful move higher as well, reaching this high right here. Now, can we retrace back into this fair value gap? In my opinion, that is on the edge of also being a breakaway gap. Now, if we have a very aggressive sting into it to then still continue higher, I would still be bullish overall. But I am not necessarily expecting a retracement back into this fair value gap to then trade off it very comfortably. I would like to see, ideally, this being a new fair value area right there, overlapping with a fair value gap to then continue higher. So again, the reactionary level is where we currently are right there, this high. Because if tomorrow, for example, we have this move lower right there, then I'll take a step back and I'll be like, okay, this is not that interesting. And I would want more confirmation to continue higher again. So ideally, I want a higher fair value gap sitting right there to then continue higher off of that. That is ideally what I will be looking at right here. And again, I will not be looking at the 4 hour just yet. I will mainly look at the daily right here and wait for a daily value gap to continue higher from, or at least a clear daily indication on what we want to do right there. Because if, again, we have tomorrow a huge down candle, then I will not be very interested and I will wait for the remainder of the week. But if we get the daily value gap right there, we have still the bullish price action intact overall. I will look for longs all week on the dollar. Unless, again, we start to retrace very deep. But there's no reason to retrace very deep anymore. We have come back into this fair value gap right there. Deep retracement. Come back into that fair value gap right there. Deep retracement. At a certain moment in time, price will be fully fair value and we won't create a retracement anymore if we are truly bullish and we truly want to move into that direction. There won't be an infinite retracement, because when we have infinite retracements, that also shows that we don't have the intention. What does that mean? Well, if we always create a retracement like this, what does this indicate? Might seem like a very good trend, but I would argue that's actually not a very good trend, because what is a better trend? Where we have two retracements and then we explode higher like that, or this? Well, this trend right here, if we don't get a chance to get involved potentially, unless we was a little bit earlier with our entry, but this is a better trend. Why? Because the bullish intention is a lot more visible, where here you have bullish and bearish intention. That's why we create the retracements in the first place. So it's very important, and arguably one of the most important questions is also asking yourself, well, do I even want to see a retracement in the first place? Because if we do get a retracement, that means we might be bearish actually. Very important to understand. So I am not expecting a huge retracement. If we do get a retracement, that's not interesting to me. Okay, perfect. Once we understand that, let's dive into the indices. Russell to me right here is just not that interesting. And if we're being honest, I can't get to a clear indication of what we want to do on Russell, and it's still in a similar position. Actually, well, arguably it didn't even really move from where we did the previous forecast right there. So right here, to me, it's still not interesting. So in this case, where price action is just not really clear and we don't really know what it wants to do. Well, at least I don't really know what it wants to do. Then what do? Do we force an ID, or do we just wait for higher time frame confirmation? Now, what I do is I just simply wait for a daily fair value gap either going to continue higher or continue lower. That's it. I want a simple higher time frame fair value gap that I can trade off of. And in the meantime, I don't want to get caught up in a consolidation. So I protect my capital, essentially. Okay, then we move on to ES. All right, ES, quite interesting. We have a few things. We have this weekly fair value gap sitting right here, which we could potentially trade back into. We have a large rejection at the top right there. Now on the daily, we have early signs that we might be disrespecting this daily fair value gap right there, although we are coming into the fair value area sitting right there as well. So we have to see how we reject off of that right there. If we already get on the 4 hour right here, fair value gaps going higher, for example, then we can simply look to target this swing high right there. But if we do not get that, and for example, on Monday already, we get a push lower right there, even on the 1 hour, then we can target the weekly value gap and then see what we want to do with that weekly value gap. If we get a rejection again, or we don't get that rejection. Very interesting, by the way, if you want to study something, study the sharp turn right there that we get. It was very interesting price action. And we actually mentioned in the live session in the MMT for that equities open right there, that we want to see lower prices right here. That was very interesting, very beautiful price action actually, because we have this fake top right there, fake top, sweep, sharp turn, target for value area low right there, which is also the daily value gap right there. Beautiful price action. Anyway, let's see what Nasdaq wants to do. On the weekly, this is the monthly. On the weekly, what do we have? This is the daily. On the weekly, what do we have? All right, on the weekly, we have this weekly fair value area. Again, when we look at candle signs is everywhere, and you can use candle signs in a lot of forms as well. But candle signs, for simplicity's sake, we mainly go over how we can combine it with PD rates, understanding that as well. Now, if you don't combine it with PD rates and you combine it with just fair value gaps, for example, and if we can trade back into fair value gaps, then this right here tells you if we want to trade back into a fair value gap or not. It's the big rejection right there. Where ES, yeah, it's a little bit 50-50, although I would argue still here, it's still more likely that we're going to trade back into that weekly value gap. And Nasdaq, it's quite clear that we are, well, the probability is very high that we are going to trade back into that weekly value gap right there. And that's very interesting because that creates a few opportunities right there. Either we are going to retrace, and again, this daily value gap, can we then continue lower off of this daily value gap to then target the weekly value gap right there? No, because I would not want to see a big retracement anymore right here. And if we do get a big retracement, I would argue that we might even be looking at bullish price action overall. So there's a lot of reacting to do, right? The lower we go in timeframes as well. So here, if we deliver into this weekly VWAP gap right there, I do want to see, okay, can we continue higher off that? And can we create, for example, 4-hour VWAP gaps out of that right there to then continue higher? Or are we disrespecting and following through on bearish fair value gaps as well? Very important, quite interesting price action, but there's quite a lot of reacting right here to do. After daily fair value gap, weekly fair value gap right there. Use fair value gaps to react right there. All right, YM. YM, if we look at the weekly, we've reached this weekly fair value gap. Now, can we continue lower off that weekly fair value gap? I'm not 100% sure right now. I do know that we have this daily fair value gap right there. And if you've watched, I'm not sure what video that actually is on my YouTube channel, but it's quite an old video. It's a 50-50 area where when we have a premium array on the time frame above us and also a discount array on whatever time frame it is. So in this case, we have a weekly discount, daily discount array with a weekly premium array in the form of the fair value gap right there, both fair value gaps on both sides. Then this area right here creates 50-50 area. That's consolidations, and that is trapped order flow. Now right here, if we deliver back into one of these, I want to see one of them getting disrespected, meaning either we continue higher with a new fair value gap or we continue lower with a new fair value gap right there. But in the meantime, I'm simply waiting right there. I don't want to get involved because this again is 50-50 price action right there because it's trapped between two PD arrays. All right, DAX. Let's see. DAX. Now, we discussed this last week, and I think one of the most important parts to understand on DAX is the correlation between the other indices. DAX, like we mentioned in the previous forecast, is like the long-lost brother of the other indices, or the smaller brother of the other indices. It doesn't really have anything to say. So if the other indices want to continue higher, then DAX will just simply follow through. So if DAX is showing us something of lower prices, for example, off of this weekly value gap, and it wants to continue lower off of that, but the other indices are not agreeing, then DAX will either end up going higher as well, following the other indices, or it will end up as a consolidation. That's why market correlations, especially in if you want to trade for something like DAX, very important to understand. So here on the weekly, we had this weekly value gap right there, which we might continue lower from. But again, if we then look at ES and Nasdaq, is it very certain that we have a real top in the market right now on Nasdaq or ES? No, not really. So that's very important to understand for DAX, because then it might not have the volatility, the strength to actually push lower right there off that weekly fair value gap. So right here, we see this as well, by the way, what we saw. And this is also why I didn't want to trade off the daily value gap right there, for the same exact reason. So here, we have this weekly value gap right there. And again, I'm not too interested in looking at shorts right here currently. I want to see how we reject off that. I want to see what the other indices do. I do think we can trade back into that weekly value gap right there. But overall, it's a lot of waiting right here. I want to see what the other indices want to do and if we get a big rejection right there as well or not. And if we don't get that, then I'll just simply look at fair value gaps going higher right there. All right, Australian dollar, US dollar. Now, I'll give you a list for the Forex majors as well, which I am currently interested in, and the ones that I'm not interested in. Now, Australian dollar, US dollar is one that I am not really interested in. And the reason for that is because we are just in a bigger consolidation right here. So once the dollar continued lower a little bit, Australian dollar, US dollar throughout the week right there had a big rejection higher, which means Australian dollar is actually quite strong if we compare it to US dollar as well. Which means if we now want to continue lower right there, then Australian dollar, US dollar is quite a strong pair. And strong pairs is not what you want to short. You always want to short the weaker one, and you always want to long the stronger one. So if we're looking at longs, then Australian dollar, US dollar could be quite interesting. But is Australian dollar, US dollar quite interesting for longs right now with the dollar potentially continuing higher? No. So with that being said, we can come to the conclusion Australian dollar, US dollar is not high probability right here. It's just not that interesting to look at shorts because we mainly base it off the dollar right there. So I don't really want to look at Australian dollar, US dollar. And if I do want to look at it, I want to see a new bearish daily value gap right there being created, disrespecting this full bullish daily value gap as well. But I also don't want to look at longs. So to me, don't look at Australian dollar, US dollar if you are looking to for a trade ID based on the dollar, based on Forex majors mainly. All right, Euro US dollar. So very similar to the dollar. We have this weekly value gap right there. Do we think we can retrace back into that before reaching, for example, lows like this? And we also have a new swing low, first target of the week right there. In my opinion, no, I wouldn't want to see a retracement back into that. That's quite a big retracement to make. Even this daily value gap right here is very similar to the dollar. Even that daily value gap is very big retracement to make before we reach this low right here. So in my opinion, what could happen and what do I want to see? If we already want to continue lower, I would want to see a sting into maybe a 4-hour value gap right there to then already continue lower right there. Afterwards, find fair value gaps that are overlapping with this exact low sitting right there to then continue lower off of that right there. If that does not happen and we do create big retracements, something like this right here or something like the weekly value gap, then be very wary that shorts might not be the greatest idea anymore and that the arguments are now changed. So again, you can just use the arguments list right there, and when you need to react or something else happens than intended, that's exactly when we need to be very aware, is not the highest probability anymore. We might want to stay on the sidelines or at least minimize the risk exposure. So risk per trade, keep it very low. All right. Now EU is definitely one that I will be interested in throughout this week. I do quite like it right here. Very clear targets in my eyes. It's just a matter of, can we now actually look to follow through? GU. So the reason why I didn't like GU a lot last week, well, at least at the beginning, because at the end, I did like it. In the beginning, we had this weekly fair value gap right there going against us. So on the daily right here, we also had a daily fair value gap right there going for us to continue lower. That again creates that 50-50 area where we have essentially price action stuck between two PD rays. Now, eventually we follow through lower right here, which is perfect. We are having early signs of disrespecting this weekly fair value gap right there, which is a good sign. Now we are running into fair value area right there as well. And if we now want to continue lower, I ideally want to wait for a little bit more confirmation. So again, this daily value gap, yes, we could sting into that, but I would want it to be an aggressive sting to continue lower right there, disrespecting, so taking out this rejection that we have right there, this wick, the low of this wick right there. And when we continue lower right there, create new value gaps below that, that's perfect. That's exactly what I would like to see. Let's go to the 4-hour to get a clear understanding right here. Again, very similar on the 4-hour. If we get this value gap right there, that would be perfect. That's exactly what I would like to see. Again, very similar story to overall EU, etc., to the dollar. If we get big retracement like right here, so if we get big retracements like this, that's not interesting. I would not want to see that, because then we might be continuing higher off the weekly fair value area right there. And we might actually want to push higher instead. So that's very important to understand as well. React right there. Also interesting, EU to me is more interesting. So I like EU more than GU, but I like GU more than Australian dollar, US dollar. So currently to form a top 3, EU, then GU, then Australian dollar, US dollar. But that might still change. All right, let's see. On New Zealand dollar, US dollar, creating that monthly value gap as well, which is quite interesting. Potentially, again, we still have this week to go. On the weekly, I do believe we still can target this weekly value gap right there, but the overall delivery towards it is not the nicest. We have this daily value gap right there, so it's weaker than, for example, Australian dollar, US dollar. On the 4-hour, wow, we get very ugly delivery right there. I do not like that. This looks very ugly to me. Now, if we can create 4-hour value gaps right here to continue lower off of, then the weekly value gap could be quite interesting. But in the meantime, I would want to wait. But still, it still looks more interesting to me than Australian dollar, US dollar. US dollar, Canadian dollar. Let's see. It's to say just straight from the go. US dollar, Canadian dollar to me is not interesting. And if we're going to look to trade some of the Forex majors, then again, I do not think the focus should be on US dollar, Canadian dollar right here. The only thing that I can see is a potential sweep of this low right there to then potentially continue higher after we get a confirmed sweep. So what's a confirmed sweep? Well, we have no sharp turn right there currently. That's why we're seeing the big rejection lower. If we can create fair value gaps going higher, Could be quite interesting right there to continue higher. But overall, with the dollar continuing higher, Canadian dollar has still been going lower right there. That's not a good sign because that means that Canadian dollar, in relatively seen to the US dollar, is quite strong. They're quite equal right there. And if they're equal, then it leads to consolidation, of course. If one currency is a lot stronger than the other one, for example, US dollar is a lot stronger right now than JPY, leads to clear trending conditions, leads to the best high probability conditions. When those two currencies are equally as strong and no one can really win from one side of the market, that's not good. That is not good because that leads to price action like this. So US dollar, Canadian dollar to me, not interesting and definitely not on my interest list right now at this moment in time, potentially later on this week. US dollar CHF, quite interesting because we talked about this actually last week and it played out quite nice thus far. So we have this weekly value right there, which we could actually look to target. We are potentially sweeping this swing low. And this swing low right there is what we talked about in the previous forecast. If US dollar CHF wanted to continue higher, then the only option it really had right there was to sweep this swing low to then continue higher. What do we have? We have a beautiful sweep right there. This is perfect. Now, then afterwards, we can target this high. Again, this is the same story, right? This is just a fair value area right there. Disrespecting the fair value area, not offering fair value anymore. We can now target that liquidity potentially. On the 4 hour, I would like to have 4 hour fair value gaps right here to continue higher off of right there. That could be very interesting in my eyes, and I'll definitely keep this on my interest list as well. Looks very nice. Looks very nice. Again, keep in mind, I don't want to see a big retracement, right? That's very important to understand. So we might consolidate on that Monday, creating a daily value gap. That's perfectly fine. But this fair value gap right here, that's not interesting to me. I want to see a fair value gap above this area right here. All right, US dollar JPY. Yeah, like we mentioned last week as well, this is quite interesting and beautiful, very strong price action. Now we're almost reaching these all-time highs right there. And when we do reach those all-time highs, I want to take a step back right there. So here, it's getting very close. We can still look to trade off potentially even daily 4 hour value gap right there to continue a little bit higher. But after that, I want to take a step back because I don't like trading all-time highs right here. I like to trade when we have a retracement to then continue higher again. It's the easiest price action to trade right there. So here, yes, very clear trend, but arguably the trend is well, not done. I don't want to say that, but we lose a lot of accuracy when we don't know how far it can actually reach for. That's very important to understand. So still 4 hour value gaps, daily value gaps, very interesting to look for higher prices off of. But overall, keep in mind that we don't have any clear targets to the left anymore. It's very important when we have those all-time highs. So to sum that up for the Forex majors right there, EU, very interesting. US dollar CHF, very interesting. US dollar JPY as well, very interesting. After that, I would say GU. Least interesting to me is AU, New Zealand dollar, US dollar, and US dollar, Canadian dollar right there. They are the least interesting to me right now, heading into next week. Metals, silver, perfect. What do we have? Let's remove everything that we have here. We've talked about this for a while, and we mentioned already last week that we are just failing to reject higher off of this fair value area right there, which means that we could be looking at short, but we also don't have a clear fair value gap that we can continue lower from. So again, when we get this rejection higher right here, that's not interesting, right? That's very low probability because we have been failing to reject many times right there. But can we finally create, for example, a daily fair value gap right here to continue lower off of where we can actually look to target lower? That could be quite interesting. In the meantime, I still want to wait right here. So nothing much going on. All right, gold. So gold, what we mentioned last week was pay attention to this high right here. Because most likely we are going to deliver towards that high right there. And when we reach that high, we need to again react. We need to see, are we going to run that high? Or are we going to sweep that high? Here we have this fair value gap. And this fair value gap, if we want to run this high, want to continue higher, this is the only fair value gap that can do that. This is the last, essentially the last line of defense right there, where it's not a swing low, swing high. But because if we fail that, we're going to reach all the way lower, creating a dominoes effect, which we call it in the MMT. So here, if we want to continue higher, is this fair value gap, which we do continue higher off of. Now after, we have a next resistance area, which is this breaker, the old breaker right there. Where we see we have this fair value gap, we get a rejection off of that, actually already a little bit earlier. It's sitting right there. Get a rejection of that. Don't follow through. We sweep this high, get a big drop lower right there. And now I do believe we can also look at some of the lower prices. So again, 4-hour daily value gaps to target lower, target this low right there could be quite interesting as well. Does look quite interesting. Looks more interesting in my opinion than silver. All right, Bitcoin. Bitcoin is weird because Bitcoin has such weird price action if we compare it to the usual instruments like indices, Forex, even metals, even commodities. Bitcoin is just a little bit odd. So if we take a look at Bitcoin, then, well, let's take a look at the higher time frame right here. We came into those weekly fair value areas right there, into fair value gaps, sorry. Also fair value areas because we have order blocks right there. And we are just not creating rejections higher, neither are we lower. So we are just slowly tumbling down. It's not really with a lot of intention, but we are slowly continuing lower right here. No fair value gaps to be seen. So it's very odd price action right here. And I don't necessarily want to do anything. If I want to do anything, then I'll most likely start looking at shorts right here, targeting lows. But other than that, it's not too clear what it wants to do for the longer term right here. In my opinion, this is still a bigger consolidation. So I wouldn't be surprised if all of a sudden we have an expansion right there going higher a little bit. So overall, don't really want to do anything. It's very odd price action. All right, crude oil. Arguably one of the highest probability instruments last week and also heading into this week. I do believe it's one of the highest probability instruments. Really, really good price action. I caught one trade this week and that trade was on crude oil and it was a winner. As well in the live session, we discussed a trading idea which also played out perfectly. It was just beautiful price action. So here on crude oil, we had this fair value area, which was getting disrespected right there by that rejection. We had the rejection right here. Failed to follow through, creating bullish fair value gap as well. After, once we don't offer that fair value anymore, we are seeking liquidity in the form that high. So the drawn liquidity was so stupidly obvious almost that we had to capitalize on it. Now right here, we reached this high. This high is now what? That's also a fair value area. So what do we have? We have this fair value gap overlapping with this fair value area right there. Absolutely beautiful right there. And if we do want to continue higher this week, and the reason why I state this week is, I'll get into that. If we want to continue higher this week, we will see a sting into this fair value area right there to then continue higher off of that. And the reason why I say this week is because we need to monitor this rejection. If the rejection struggles, so for example, we fail to create a rejection, we don't really get 4-hour value gaps, we don't get any fair value gaps, we don't follow through on fair value gaps, and we start to consolidate like this, then pay attention to that we are right here in the third candle of a weekly value gap, so that we might create a weekly value gap right here to then continue higher off of that instead. Because we've reached above a swing high on the weekly. Swing highs, swing lows, resistance in general, they are the cause to create a fair value gap to then continue higher off of that. So what I mean by that is, let's see if we can find any examples. If we take a look at a few examples. Can't really find a good example right now, to be honest. Well, yeah, we have one here. So we have this one right there. Those swing highs right there, they create essentially somewhat of a pullback to then create the value gap to then continue higher off of that. Happens, if you study that, especially on Forex Maze as well, happens over and over and over. On the dollar, it happened last week, for example, right there with this swing high right there, that causes the fair value gap to be created. Swing high right there, that causes those fair value gaps to be created and trade back into. Happens a lot. So here, we need to pay attention to that daily value area, daily fair value gap as well. And if we already want to reject higher off that, if we don't, pay attention to the weekly fair value gap next week. But that's something we'll discuss then at the end of the forecast, next forecast. But that's very important to understand. We need to react right there. All right, other than that, crude oil is at the top. Currently. I've not gone over the cross just yet, but crude oil is at the top of my interest list still. All right, weekly on Bank Nifty and monthly, we are at an all-time high right there. Now, this all-time high, the previous all-time high right there, is like we mentioned, right here. That's now a fair value area. So we've been targeting that all-time high right there for some time, even though we had that fair value gap. We discussed that in previous forecasts as well. This high was the target. Now, once this high is reached, that right now turns into a fair value area that we can continue higher off again, creating new all-time highs. So that could be quite interesting. That's mainly what I'm looking at for Bank Nifty here as well. Again, I do want to mention, when I say something is high probability, you still need to react, right? Very important. Don't put your expectations on, oh, this is definitely going to play out. No, because I will be very neutral. So a lot of reacting to do. Very important to understand. All right. Here we are. Is the camera still working? It is. It is. Perfect. Oy, 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 oy. There we are. There we are. Was it clear? Was it clear, the forecast, or was it a little bit vague? What are PD rays? PD rays are essentially, to sum it up, support and resistance area. So resistance where we continue lower off of, support where we can continue higher off of. And they stand indeed for premium and discount arrays because they offer short-term premium and they offer short-term discount as well in the market. And when we offer short-term discount, new buyers come in, we can continue higher. DAX Germany follows the other indices, so YM, Nasdaq, and ES. Mainly I would pay attention to ES and Nasdaq right there. If that makes sense. GBP Canadian dollar. Let's take a look. Let's take a look. GBP Canadian dollar. What are we doing? Yeah, this is quite interesting. And by the way, I'm not sure because we talked about this actually in the previous forecast. Beautiful, beautiful. It was just beautiful. There was a beautiful story, and I'll tell the story right here. So let me see if you can see it fully. Let me go full screen a little bit. We reached this target right there. That weekly swing high. And again, I need you to understand as well, when we talk about that swing high, it's not necessarily that I'm talking about that swing high and we say, well, we can continue lower off that. No, it's just resistance. So remember what I talked about on the dollar. Those swing highs can cause new fair value gaps to continue higher off of. But if we get such a big rejection right there, then what do we see? On the daily, we had this daily huge fair value gap coming back into this daily value gap. We mentioned in the previous forecast, and you can go back and watch it, that if this wants to continue higher, the first candle is not a rejection. So the second candle can sweep the previous candle low right there to then continue higher, trade back into the fair value gap right there. We get a consolidation day, which is important to understand because that shows the lack of intention to be bullish. We respect this fair value gap right there with the overall intention. On the 4 hour, we continue lower. On the 1 hour, I believe some of the MMT members actually caught this trade as well. Right there, that fair value gap right there. Beautiful trade, absolutely beautiful. It's a bit of a shame, to be honest, that I missed it, but eventually we target this fair value area, right? Fair value area low right there, which is also the fair value gap low right there. So fair value gap high, sorry. So fair value gap has been reached right here on the weekly. And this is where it gets a bit tricky because now we have this fair value area overlapping with the fair value gap right there on the weekly as well. So here, I want to see what we want to do. I don't necessarily want to look at shorts anymore off of this daily value gap. That's again quite 50-50 at this moment in time. So I want to react. If we can disrespect this fair value gap right there, we create bullish daily value gaps. I would look at high prices. Looks quite interesting for high prices then. If we respect this and we still keep on continuing lower, then I just want to target lower essentially. But at this moment in time, I'm not too sure. It's very 50-50 for me right there. But overall, it was quite interesting last week. Can you talk about trade journaling? For sure. So to sum it up a little bit, trade journaling is very important. Now, what is trade journaling? First of all, let's get this straight. You need to expose yourself to pain. And what I mean by that, you need to get exposed to where something is on the line. Otherwise, we can't journal effectively. So we first of all need to have some money on the line. Again, not financial advice or anything, but that's the best way to learn because you learn the best when actually experiencing pain. So backtesting or looking in hindsight and journaling trades that you might have taken or demo trading, journaling that way is not that effective. Now, let's say we then take a loss. Ooh, please don't go up. Okay, perfect. So let's say we then take a loss and then we want to journal the trade in live conditions, right? So when we journal, we want to note down, even if it's a winner, by the way, we want to note down, could we have done something better from a technical perspective, psychology perspective? Then if there is something that we could have done better, and I saw as well on Twitter, someone mentioned, don't look into any trade too much. And I do agree with that, because you don't want, after a loss, to change your trading plan. You don't want to change the trading plan, but you can add that loss to your experience, because you see, hey, this might happen next time. Maybe I need to be a little bit more careful for that next time. That's what we want to learn. And then before we go into the next trade, we again want to do a session, deep work session, case study on the thing that we learn in the journal. And then we can dive into trading again. So that's essentially journaling. And again, there's no perfect way to journal, although I would argue that is arguably one of the best ways to journal. Just write down what you could have done better from a technical perspective, psychology perspective, where oftentimes, if you can't see it yourself, you might also need a mentor for that. Camera and screen freezed. Ay. Screen as well. Screen is still okay. Let me see. There it is. I'm not sure why it does that. Was it also the... I got stop lost. Exactly, I got stop lost. Ay. Was it also the screen? You did see my GBP Canadian dollar explanation, right? Hopefully. Yeah, exactly. Hope mentioned it perfectly. Lose, journal, deep work session, learn. If we don't learn before we go into the next trade, that's a shame, because then essentially we're going to repeat mistakes over and over again. So that's a shame. Everything froze. Ay. It's still freezing or no? Let me see. No, right? It's fine right now, right? Let's see. Okay. It's working fine. Okay, well, essentially what I was telling you right here, if you combine it with the story, is that, let me see if it's working. It seems to be working. So essentially what I was saying right here is that we have this daily value gap, and we also have reached this weekly value gap right there. So at that moment in time, it's 50-50. So here we want to be a bit more careful. We want to wait. I was long in GBP Canadian. Yeah, the story I was telling right there is beautiful for shorts, actually, right there. Last week was beautiful shorts. Beautiful. I can't trade on small account. Would you advise to go for a prop firm? If you have the possibility to do so, of course, I don't know everyone's financial situation, but if you have the possibility to do so, I do think it is the most beneficial, because there's still something on the line. Prop firm, yes, it's demo essentially, but there's still money that you put in, if that makes sense. So there's still that feeling of I need to succeed, and that's the feeling we need, because then it hurts when you lose, and that's good, because then you are more eager to actually learn. Well, most of us. Let's see. I missed a trade on GBP Canadian dollar because I waited for more confirmation, like 4 hour value gap out of the daily value gap. I don't know. Let's see. I don't know still when to look for more confirmation and when not to. It was in my ACR. I was frustrated. That's actually a very good one, and that is actually what the next video will also be about. So maybe people listening. I'm a bit scared nowadays. I'm a bit traumatized, to be honest, to mention the next video. But that is, the next video will help with that. It won't be exactly maybe about that, but it will help with that. But I'll go over really quickly what could be more confirmation right here. On the 4 hour, even candles, right? The closer the entry time frame and the closer the PD rate time frame are to each other, you oftentimes just have to work with singular candles. So not even fair value gaps anymore. This goes a lot deeper in the MMT actually, where we discuss where breakaway gaps can form, where you want to enter off of singular candles alone. Very interesting. But anyway, an entry could be, for example, just this. And of course, I'm talking about hindsight right now. So take it with a grain of salt, etc. But you can see the MMT things and how I capitalize on those things as well, just in real time. Now, right here, this expansion phase candle right there, that is already a really good entry to target 1 to 2. Cover where you don't expect price action to return, which is arguably that fair value gap right there, to then targeting a 1 to 2. So when we are talking about the 1 hour, that's when I would say wait for maybe an extra fair value gap. But the 4 hour, less confirmation. That's very interesting, actually. Very interesting. Let's see. Do you usually check currency futures like 6E, 6B, or 6J? You might see them here on the crosses as well. Because the thing, or what I used to do, is I used to go over the currencies individually right there and then see, okay, which one is really interesting to look to trade right there. I don't do that anymore because I feel like it's a little bit of a waste of time, where if I just look at the currencies itself, so the pairs right there, I already get to that conclusion as well. So it's not really interesting to me, but if we're talking about futures trading, then yes, I do look at that as well, because then if we have a futures prop firm account or whatever it may be, or trading futures on a personal account, then higher time frame trading right here on the futures currencies could be very interesting. Yeah. US dollar ZAR. Wow. I think I've never, oh, well, I have actually. I have looked at it before. Let's actually take a look. What are we doing? Is this an all-time high? Seems to be an all-time high, this. Okay. Does not seem to want to continue higher right there, but do we have clear indications that we want to continue lower? Well, we have some indications. If we can create a weekly value gap right there to continue lower off that fair value area, could be quite interesting. On a daily, already rejecting right there. So either we have daily value gaps already continuing lower right there. If we have that, look at lower price already. If we do not get the rejection, I would want to wait for the weekly value gap to then continue lower off of that right there. But lower prices looks quite interesting. Look at the target. Target for me would be this first. Can I look only EU by using MT strategy, or should I go more? You can only look at EU. We have different trading plans for every personality. So if you, for example, only want to look at the indices, we have a trading plan for that. If you only want to look at EU, we have a trading plan for that, which is called flow. So we have two foundations of trading plans. We have flow trading plan or filtering process trading plan. There's no in between. Well, arguably no in between. Those are two extremes. And filtering process, that's what we just did. So we focused on higher time frame, which is very clear. What is the highest probability to trade, for example? Then we can determine crude oil right there was the highest probability. So we want to focus on that. Flow trading plan, you only focus on one instrument all the time. And you can actually go into a lot more lower time frames right there to understand, hey, what are we about to do? So yeah, you can definitely focus only on EU with the MMT for sure, 100%. Look, how can I get the Excel tool probabilities? If you go to, wait, let me actually paste a link just in the chat. Where's my slash? Here, tool. ADPS. I'm struggling typing. This is a Spanish keyboard. If you ever switch to a Spanish keyboard, then it's very difficult because you don't know where the things are. This is the link right there. That's the link. And then you fill in your email. Do know you sign up for the newsletter. So you're going to receive more emails as well. So just know that, just a warning if you don't want that. But there's loads of, it's completely free. There's loads of value. I share exclusive YouTube videos in it as well. And once you click on confirm in the email you get, that's when you receive the tool. It starts automatically downloading. Could you show your previous week trade? Yeah, for sure. All right, crude oil. So the whole thought process was, we have this high right there. That's the target. It was a beautiful target. The only thing we did not have was a clear discount array to continue higher alpha. So we did not necessarily have a very clear fair value gap at that moment in time, at the beginning of the week. So on the 4 hour, we have a sting into this fair value gap right there. And once we sting into that fair value gap, I react because here we get a very big rejection higher right there on the based on candle signs, etc., things like that. So based on candle signs, we already have a sign. We actually want to continue higher right here. So on the 1 hour, my entry was sitting right there. only MMT members will actually understand the entry because it's based on, we call it stick entries. It's based purely on candle signs. So here, cover that low, and it was around here. That was the trade right there. That was my trade. And then afterwards, when we had the live session, we also had this. So we had this 1 hour. There's multiple ways of capitalizing on it, right? I just use the higher time frame more. I don't know. I prefer that for my current lifestyle. So here on the 1 hour, we had that resistance. On the 15 minute, we had this fair value gap going higher right there, disrespecting the 1 hour resistance that we had. And afterwards, in that 15 minute, we had on the 1 minute, beautiful sharp turn entry sitting right there, covering that right there because we don't expect a big retracement, targeting 0.122. This was the one we discussed in the live session, actually in the MMT as well. So it was beautiful. It was absolutely beautiful. It was very, very nice price action. And it would be lovely to get some more price action like that as well. It would be very nice. And price action like that is very important to understand. Capitalize on it. Because the drawn liquidity is so extremely clear. You almost want to capitalize on it. Is A to Z enough to become a fund trader, or do we need to enroll to your course? You never need to enroll to my course or my mentorship or anything. That's absolutely not needed. Let's put it that way. It's a luxury. And what I mean by that is A to Z guide, market mastery, the YouTube videos I make. That's enough. That's enough. And I honestly believe that. And we've shown in the past as well, a lot of people get payouts. I've previously received emails actually from a person who received constant payouts, constant profit challenges, pass, etc. just purely from the YouTube alone. But what I mean with it's a luxury, the mentorship, is that it speeds up the process. That's why it's a luxury. But if you don't want that, then the YouTube is enough. Enough. Please, please, please believe me on that one. It is enough, 100%. Can I buy one Aston Martin by trading? I do believe that's possible, 100%, 100%. Or you want to trade Aston Martins? I don't know if that's a great idea, unless you can find vintage ones. I believe, do Aston Martins hold their value quite well? I'm not too sure, actually. I'm not too sure. Please explain the aspect on the dollar weekly value gap. Aren't FVGs supposed to be a magnet? If it's a breakaway gap, it's not a magnet. So if it's a breakaway gap, we don't even want to see it as a magnet, and it's not a magnet actually, right there. Unless a breakaway gap can only be a magnet as long as we create bearish order flow. So let's say we now create 4 hour value gaps lower, we start to create trending conditions towards that weekly breakaway gap, then yes, we can use it as a target right there. But it's not a magnet right there, whilst we are continuing higher, if that makes sense. How about your indicator in TradingView? Let's see. This is not my indicator, by the way, but there was a person. I'm not too sure who made it actually. It's a mark right there. Value gap breakaway, third candle, who made a breakaway gap. Again, it's not approved by me or anything as well. So, but from what I can see, it shows them really well. So that's quite funny actually. But we're also making our own breakaway gap indicator for the MMT and also probability indicator. So we're actually working on indicators and providing indicators, not to be reliant on indicators, but it helps the learning process essentially. And that's very valuable. So I'm not sure who made this, but when I look at these, I do agree with them. So that's very funny. That's very funny. So the person who did this studied it very well and then implemented it as well very well. So yeah, that's very funny. Very funny. Okay, look at ticker GE. GE. Aerospace. Is that the one? Right there. You have high conviction for... A conviction, can you give your opinion, please? Let's see. We have a monthly value gap that we're sticking into. Is this an all-time high? Oh, it's not an all-time high. Okay. It's not an all-time high. Okay, we have this fair value area, which you could argue is a little bit lower, but we're sticking into that fair value gap overlapping as well. It's looking good. On the weekly, we have a nice rejection right now. Daily, beautiful sharp turn, which we can continue higher from. Then these highs as a target right there. I do believe that's very doable. That high right there as a target. Yeah, that looks very good. That looks very good right there. Afterwards, let's see if we can follow through. But having this as a target first, that looks quite good. That does look quite good. I like that. After potentially reaching this swing high right there. Yeah, looks good. Looks good. Very nice. Silly question. Beyond your YouTube videos, do you have strategies and learning that you reserve only for those in your program? Yes. As in, I say YouTube is enough, but there is also things that are only for MMT members. So for example, indicators that we're creating is for MMT members, but also knowledge. As in, candle signs, what I touch on YouTube is the tip of the iceberg. Order flow, I don't touch on at all in YouTube. I don't specifically mention it actually. Strategies, there's a lot more strategies as well that we use in the MMT, which people here have just never heard of. For example, stick, which I actually actively use to enter. I don't discuss that in YouTube. So yeah, there's quite some things. There's quite some things. Yes. Which YouTube videos / playlists should we watch and in which order? What should be the focus going in? Because I'm sure we don't need to know every concept. Yeah, very good as well, because you don't need every concept. And it's very important to understand. Find the concepts where if I explain it, it makes sense to you or resonates with you. You find it very interesting. But if it doesn't resonate with you and you're like, Arjo, what are you talking about? Just not a good video. Please just move on to the next video or something like that. Then don't use it. That's very important. So for example, if I talk about something like a breakaway gap and you're like, what is this guy talking about? Then simply don't use it. Simply don't use it and just move on, because it's very important to understand. You don't need all the concepts at the beginning. Eventually you can build up that understanding later on. So that's very important. Now, I would advise start with the A to Z guide. A to Z guide will already filter out a lot of things that you might be interested in, might not be interested in as well. So that's very good. Then after, you can also move on to market mastery. Then I would say the videos after market mastery, so that I've recently been making ever since the master these 3 concepts video, I would say, maybe even before that, there's still really a series going on. For example, the next video will help with the understanding of the previous videos as well. So it's a constant series in that sense, but start off with the A to Z guide, I would say. Yeah, I hope mentioned that perfectly. For candle signs, you need to wait till candle closes in context time frame. If you go lower, then you are looking at order flow. Correct. Correct. So just looking at a singular candle signs going down into the candle, that's called order flow. Let's see. And for more questions, by the way, please also reach out to info@arjo.io right there for more questions. And by the way, one thing, again, I mentioned it at the beginning as well, but I'll say it again. The MMT is having a relaunch. Again, not necessarily the concepts or anything is completely changing. No, they will always stay the same. We'll always use the same concepts because they work. They show results. But we will open with 1 month as well. 1 month mentorship again. There will also be a different package, not essential. It will be called light as well, next to the masterclass, which will open up again as well. And we will have indicators. There will be a completely new website as well. A lot of new things available. So more value, essentially, more value as well. So that will be very interesting. It will be very interesting. More accessible as well to everyone, which will also be very interesting. So yeah, just so people know that. But if you have more questions or questions about that, then feel free to reach out. Did you start a prop firm? No, not yet. Well, start. I believe the preparation is also a start. So in that case, yes. But then we've been starting for about 6 months now. But other than that, it's not officially launched. No, not yet. We're waiting for one more thing. And then we can start pushing it out. Let's see. Yeah, for sure. US dollar, Canadian dollar has a lot of news supporting the ID. Canadian dollar CPI as well. Unless the consolidations still are there, then it might just have a volatility spike and just come back. But overall, it could be very volatile. Neem jij je trades op privévermogen of op prop firm accounts? Het meeste privévermogen. So the question was in Dutch, do you take most trades on private, private money, essentially private capital, or prop firm accounts? Most of my trades are on private. Private as in investors capital, not private. I don't actually have a private account, as in not necessarily actively trading that. And then here and there I do also trade prop firms. So in April, for example, I passed the challenge with FTMO as well. Is the MMT free? Well, everything you're seeing here on YouTube is completely free. 100%. But the mentorship, that's not free. No. Will there be essentials available again? Not exact essentials, but it will be called light and it will be available again. So a similar package, yes, will be available again. Yes, correct. It's been closed for a while actually now, because we've been working on it for quite some time. Do you teach scalping on the MMT? 1 minute trading, if you mean that. Scalping, yes, correct. Yes, for sure. Last week forecast on Euro US dollar, you mentioned price will sell from the second CIBI, even though fair value area was at the first CIBI. Please expand more. Let's see. I'm not 100% sure of what I exactly mentioned on the 4 hour. Let's see. Where was it again? It was this one right there, that fair value area. That's where I want to see lower prices off of. Now I mentioned, I'm not too sure what I mentioned exactly with the CIBI. So please help me with that. But other than that, what I want to wait for is the fair value area right there to continue lower off of. And this fair value gap, that to me is not that interesting right there. So if it was a situation like this, I want to see first a sting into the fair value gap that's overlapping with the fair value area right there, or a little bit higher, to then continue lower, essentially, because I want to see it offering fair value to then continue lower, if that makes sense. But this fair value gap alone was not that interesting, and it's purely because of the fair value area that we have right here, if that makes sense. I'm not sure if that was it, or if I mentioned something else. Are you working for a company, or you create website and all of that on your own? I have a lovely business partner, a great guy, who has a lot more understanding of the technical side than I have when it comes to, for example, creating websites, etc., things like that. But we do hire a company for example, creating a website and things like that. Yes, we do. Yes, I don't create it myself. No. The current website that we have was created by ourselves, but it was quite fast because we were in a certain situation. Then we had to move to a new website, etc. So there was a certain situation going on. But this website has been going on for some time. Yes. Thank you for making life good. No worries. No worries. Can I get MMT membership online? It's all online. It is on ario.io. We will also actually have a new domain, which will also be funny. It will be a new domain actually, but it's ario.io. And if you go to ario.io, it will still send you, of course, to the new domain as well. But yeah, ario.io. Any tips or advice on first fund account? You're going to lose it. No. It's just the first thing is set your expectation right. So you might lose the account. That's the first thing, but that's not a bad thing. That's very important. So it's not a bad thing to lose that funded account because you're going to learn a lot from it. That will set the tone of how you start trading eventually. So learn from it, journal it a lot, keep the risk management intact, and yeah, you have a beautiful learning experience which will set you up for success for the rest of your trading career. So don't be afraid to lose it. Don't be afraid. But of course, not being afraid also does not mean go ahead and use 5% risk. No. Don't be afraid as in you're going to learn. That's the moral of the story. Who creates your videos? New visualist. Those are really the best. Are you doing the video editing by yourself? No. I used to do it by myself. So if you look at A to Z guide, I believe somewhere around that time, I do it myself. Other than that, we have, so I believe after A to Z guide, not 100% sure, we have an editor in-house. So not a marketing agency or anything like that. We have an editor, and I essentially grew that editor through a project where you learn more and more and more and more. And then we have the perfect style how we want it. And that editor also, of course, knows trading. That's the most important part. Because I oftentimes see those YouTube videos, and don't get me wrong, it's nothing against other people, but I just see those ADHD editing with a lot of things going on. It personally annoys me a lot where I see a lot of things going on. I just want to listen to the value. If there needs to be something cleared up with a line or something in the screen, that's about it. But the constant boom, 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 everything on your screen, ooh, I don't like that. When I go to YouTube, I see everyone is copying Ario. I've seen quite some things. I've seen thumbnails. I've seen some editing styles. I've seen, of course, the content of what we actually discuss. Things like candle signs, especially fair value gaps. Yes, they are getting copied, but take it as a compliment, I guess. Take it as a compliment. It's a bit of a shame that sometimes when it's an exact copy, it's like you might as well give some credit, right? But yeah, a bit of a shame. It is what it is. It is what it is. It is well done. Keep going, please. I'll let him know. I'll let him know. Yeah, if it ever gets to the crazy a lot editing where it's so much things on the screen and constant sounds, it's just let me know, because I would not like that. I would not like that. But I also watch the videos myself. Sometimes some videos that I watch myself, I see, hey, I'm very vague, for example. I'm not clear about the steps, and I think that video can be redone, can be better, because of course I need to have my explanation on point. That's very important. Why don't you post cars, houses like the gurus? Well, if you have knowledge and you have value and you're an actual trader, and believe it or not, if it actually works for people, you don't need to do that. So if someone is selling, is showing their cars and houses, oftentimes it's because they can't convince you with the knowledge that they have, and they can't show you, hey, this student I took and it actually worked. No, I need to pick on people that are quite vulnerable, because they just want quick money, quick cars, quick houses, etc. They want the fancy stuff. Yeah, that's also not my target audience, in all honesty, because that's not really the people that I want to target. That's not the people that are going to end up being profitable at the end of the day as well. So yeah, if I ever start doing that, just know I'm in very deep trouble, as in I'm not myself anymore. Not myself anymore. I want to quit my regular job. What advice can you give me? Don't quit too soon, my friends. Very important. Don't quit too soon. Take your time. Take your time. Can you fully prove to yourself as well that you can actually survive from trading? That's very important. Very important. Because otherwise, if you're reliant on trading, you don't have a backup, you have nothing else, it's going to be tough. Very tough. And very tough on your psychology, etc. Things like that. So that's very important. Very important. Very important. I want you to join your MMT, but I see Essential is closed forever. What should I do? Because I want to understand from A to Z, not the masterclass. If you want to join Essentials, then you can wait. We will have a relaunch, I hope in the coming months somewhere. I'm not 100% sure, but then I would advise wait for the new sort of package that's similar to the Essential also to open up. Okay, tell us how old you are. I am 22 years old, my friend. 22. If you're a filtering process trader, so you are trading multiple pairs, would you then stick to Forex only, or can you also do indices and commodities? For me, indices look kind of different to FX. Great question. Indices for filtering process are not the best. So if you want to trade indices, my advice would always be go for one instrument on the indices. But if you want filtering process, mainly focus on Forex. Metals is also doable. Although metals, I would argue, very similar to indices. Maybe look at a flow trading plan. And commodities, yes, also. So crude oil, for example, is really good for filtering process as well. Also really good for flow, but both. And then, of course, the crosses, which is Forex, also really good for filtering process. Yes, so mainly Forex, Indices, I would advise don't even look at it for filtering process. You can skip over that for filtering process. It's not that interesting. It's really comes down to flow. So lower time frame action on the indices. How long have you been trading? 4 years now. To sketch you an ID, I was in some university, computer science. I stopped university because I had an opportunity to play professional basketball, which was always my dream. Always play professional basketball, or well, not professional. Always play basketball at the highest level. So that was a dream, and I went to Italy for that. Then in 2 years, I was busy with that. COVID started during that time as well, etc. It was just a sign of like, well, this is not great. As in, if something like COVID happens, then essentially I'm on the sidelines. I can't do anything. And that was quite annoying. So eventually I made a very tough decision. I stopped with it, and I was around 17 to 18 right there. And I was already looking at dropshipping before that even, already looking at trading as well. Stopped dropshipping, even though I was successful with that actually for a while. Not crazy numbers or anything, but I did good. And then I started trading because I thought, well, that's better profit margins. So why not do that? And yeah, that's quite difficult. That was quite difficult in the beginning because I underestimated how difficult trading was. So ja. Waarom ben je vertrokken uit Nederland? Reden belastingstelsel. It's one of the reasons. So the question is, why did you leave the Netherlands? Is it because of the taxes? It's one of the reasons. Not the main reason though. It wasn't the main reason. As in there's some work around that. Taxes, don't come at me. Belastingdienst, please. But not the main reason. No, not the main reason. Main reason was about my girlfriend and her family. And was it cheaper to live in Colombia to then fly back to the Netherlands all the time? If you take into account taxes, the cost of living, etc. Or was it cheaper to live in the Netherlands and fly to Colombia? Every 6 months stay in Colombia or 6 months stay in the Netherlands, for example. So yeah, then the decision was, well, Colombia looks a lot nicer. And also side things that happen. Okay, your development is usually a lot bigger, a lot more as well in a different country, which is quite nice, I was on holiday for 20 days and did not touch trading. How to start again? That's a good question. We actually have a video on that specifically in MMT because when I went to Thailand, actually, it was in August with some friends. I also discussed that actually because I did not really look at trading or anything. So it's always, you need a new warm-up. It's very similar to sports. So if you play football, whatever sport it may be, and you don't do that for a while because it's vacation or whatever it may be, then you're quite slow to start again. As in, your foot is not really in control. Your footwork is not really in control anymore. You don't kick the ball the same. You don't shoot the ball the same anymore. So you need that warm up. So first things first, you need to just study the higher time frame charts. So just look at EU. What have we done right here? What have I missed right here? Because we need to be aware, hey, what happened on the previous Wednesday? What happened on the previous Tuesday? That's what we need to be aware of constantly. So here, just look what happened in the time that you were gone. When you study that, then just sit out for a while. So take a week to just study the chart right there and see, okay, I think this might happen, but I'm not going to act on it. So I'm not going to trade on it. First have the warm up again, the warm up period. And then afterwards, you can start slow with low risk and you can get involved again. Oreo is like an Oreo. Its content is like the cream filling sweet and lovely. Oy, what is that? You know, a lot of Americans actually call me Oreo because they have a difficult time pronouncing Oreo. It's quite funny. I had an American basketball coach who used to always call me Oreo. Quite funny. Good times. EURUSD last week trade. Which one? Which one was it? EURUSD. Which one was it? Because here for USDCHF, I don't necessarily see a very good trading opportunity if we look at the higher time frame. Not yet, though. Not yet. Not yet. I have a problem that I don't look on PC for trading. How to deal with that? Because I see on chart. Can you help me? Are you looking at your phone? As in, you trade on your phone? I believe, well, some people are in a position where they, of course, they don't have the luxury to look at a PC all the time and to look at a full screen with a trading view chart. So if you're in a situation like that and you're on your phone, then you can make that work 100%. You just need more focus on that phone, because the reason why phone generally also does not work is because the focus is not there. You're distracted. How easy it is to open Instagram, how easy it is to open TikTok or get a message from someone. So make an environment on your phone that you can actually focus on the chart alone. And then ideally zooming out a lot, zooming in a lot, because it requires a bit more chart time because you can't see it very clearly in my opinion. And then next to that, yeah, it's doable, but it's harder. It requires more focus in my opinion. It's doable though. But if you can, then look at a PC. I do think that works a lot better in my opinion. Okay, please put a timer on the message. It looks like guys are spamming. Yeah, I already have a timer, I believe. I'm not sure actually. Let me see. Let me see. I'm not too sure. I thought I had the timer. Let me check really quick. It's not too bad. As in, it was worse. We can do like this. Like this. It's a slow mode. Slow mode. Perfect. Slow mode. I saw 100% probability in US dollar X, USDX. Am I correct? Will US dollar be strong this week? US dollar will be strong this week. Looks very good. Was it this one that you're referring to? Because this trade right here with this fair value area, that fair value gap, this was indeed 100% probability. You are correct in that. That was very nice actually. If this is the one you're referring to. What was your biggest trade that changed your life? I do not necessarily have a biggest trade in all honesty. As in, there's multiple big trades. It's not like I have one where all of a sudden I make 10 RR and right now I make 50K on a single trade. No, it's very consistent. So if I make 10K on one trade and I show that, then you can also argue, okay, you have other trades that are also 10K, because I also target always 2 RR, for example. The risk doesn't change a lot, as in either 1%, sometimes 2%, or even lower. So it's very consistent, if that makes sense. So there's not one singular trade where I would say, wow, this really changed my life. It's just not the type of trader I am. It's more about the consistency. How did it feel when trading changed your life? Well, it's not really like a thing where you cross a line and all of a sudden like you're, wow, this is crazy. It starts off very ungrateful, if I'm being honest. As in, it starts off like you don't even really notice it and you make some money and you want more from that money from trading right there. And then you want some more. You want a bigger capital. You want more capital like that. So, and after a while, you start looking back and you're like, wow, I really made it that far already. And for something where in the beginning, you're not even sure it's going to work out, right? So yeah, that's quite insane. That's quite nice. It's very nice. It's a very nice feeling just to know that you can do it. That's very nice. It's very fulfilling. Let's put it that way. Fulfilling. I think that's the right word. 22 old. Yeah, 22 years old. Yeah, a lot of people also say I look 28 years old or even older sometimes. I also think it's the way I dress, to be honest. It's I'm not in a hoodie and stuff like that. If I'm in a hoodie, then I might look younger, etc. But yeah. The anatomy of an FEG. That's quite interesting. Yeah, we could do that. That could be quite interesting. How long did it take you to learn ICT? Well, actually, from the first moment, I was in it was a very Dutch community. It was, I'm not too sure what the name exactly is or something like that, but I was in a Dutch community and I was on Telegram. And from that, I learned about something called MentFX. And when I learned about MentFX, I actually was already profitable, and I already learned about ICT in MentFX as well, because there was people talking about kill zones, etc. I was really interested. What are those kill zones? And after that, it was actually always ICT. Always ICT, essentially. Yeah. So that's also, I did not have a lot of time with support and resistance and things like that, which a lot of people do have. When you start trading, you learn about those things. I didn't really have that. It was almost straight away ICT. Such a pretty, thank you, Aussie. Thank you. Thank you. I appreciate it. Tesla, of course. The usual routine where we go over Tesla. Let's see. Is the camera working? Yes. Okay. The usual routine. Now, the last time we looked at Tesla was where the fair value gaps are marked right there. So that's here. And, oh, it's actually quite interesting. We mentioned this fair value gap. That's weeks ago. That's a long time ago, actually. And we can follow through off this fair value gap continuing lower. You'll see I have the thin line right there. That means it's very old because I changed that to a bigger line. So let's see, actually. Is this one? I'm not too sure. No, it's the same one. Anyway, this target right there has been reached. Now we get somewhat of a sharp turn, I imagine, on a lower time frame. Yes, right there. So a next target, in my opinion, is that monthly fair value gap right there at the top. Now let's see if we can reach that and if we get a rejection or we continue higher. If we disrespect this monthly fair value gap, we create something that we call in the MMT a dominoes effect, where every premium ray afterwards can get targeted. We only have swing highs and we can look to target all-time high, actually. So it's really one fair value gap right there. If it holds, we continue lower. If it does not hold, we might be at all-time highs. So that's really interesting. Really interesting. Michael R. John R. Don. Nice. Very creative. What platform you use? I try to use as much as possible. I've used Crude, I've used Funnel Engineer, I've used FTMO. And for me, I liked all of them, by the way. First of all, I didn't have any crazy things with them so far. Even though I saw Funnel Engineer had some struggles, which is quite sad to see, of course. Don't wish that upon anyone. But FTMO is mainly my go-to, oftentimes. I have PC, but I just do analysis on PC. After that, I don't open it. Okay. Why? Would be my question. Why? Why don't you open it? Maybe use alerts in that sense. You have alerts set. Let's see. How tall are you, Ario? I am 6'5", 2 meters. If you use the other system. 6'5", 2 meters. So when we expect your MMC, yeah, I thought about that as well. That's I'm still working it out, and afterwards I'm looking to combine it with as well somewhat of the re-release of the MMT. So maybe next month after that, something like that. Let's see. Please explain kill zone. Kill zone is a fancy word for a session where there's more volatility. That's it. Prove your height. You have to believe me on that one. This is very funny. Anyway, kill zones is a session. Kill zones is a session where we have increased volatility. So what does that mean? Well, from 2 a.m. to 5 a.m. New York local time, we have something called a London kill zone. And a London kill zone is essentially London session because there's more volatility in that session. And that volatility allows us to trade better. As in that 1 minute time frame, for example, if we use the 1 minute time frame, then that kill zone gives better accuracy, gives, for example, better fair value gaps, etc. Things like that. So that's essentially a kill zone. Where otherwise we might consolidate because volatility is the energy of the market. So if we don't have volatility, then we don't move anywhere. Then we have consolidation. or I have no knowledge, but have full knowledge, but I have no capital, excuse me, but I have full knowledge. What can I do? Prove that you have the knowledge. If you have knowledge, you're always valuable. You're always valuable. And whether that's through trading, if you have trading, if you, for example, start a demo account with Darwin X, I believe that's possible. I'm not too sure, not 100% sure. And you prove you are consistent, you can potentially find some capital. Might not be crazy numbers, but if you can find some capital, might be doable. Might be doable. Yes, risk management as well. That will for sure be touched on. I'm most likely going to touch on that in the MMC series. Yes, risk management is something that I want to discuss. 100%. Or is it true that ICT blew his Robbins account? I don't think so. But not because I think ICT will win the Robbins account, but or the Robbins Cup. I also don't think that. But I also don't think he blew his account. I just think that's people that don't like ICT, so they want to spread some misinformation. There's a lot of misinformation on Twitter, actually. So yeah, but I also don't think, in all honesty, I also don't think he will win it. But that's me. How to work for investor money? How can you earn? So the way it works, investor money, is investor capital. First of all, we need to find an investor. But even before that, before you find an investor, there's a process. Which actually in MMT, I'm deciding to make an investor enrollment. But there's a certain process to go about reaching investors. Which is, for example, what do investors like? What do investors want to see? So nowadays, you'll hear a lot of people say, hey, risk 2% on a prop firm account, etc. Well, that's the opposite of what investors want to see. Prop firms, you could argue, are very close related to investors as well. When you actually get A-booked, it's somewhat like an investor. And what do prop firms want to see? Same as investors want to see. They want to see you survive different conditions. So if you have a trending condition, a trending trading plan, can you survive a consolidation? You don't necessarily need to make profits, but can you at least protect the capital? Can you not blow my money? Essentially, that's what the investor is asking you. And afterwards, you have risk management. So how volatile is your equity curve? Does it go from 8% drawdown to 8% profit in a month difference? For example, 1 month you're making 20%. Investors understand this very clearly. When you're looking to trade for prop firms, even when you are looking to trade for investors, in general, the world, hedge funds, whatever it may be, investors are not looking for you to make 20% a month. Investors are not even looking for you to make 10% a month. Maybe 1%, 2% a month. That's perfectly fine. Do your thing. That's perfectly fine. But 20%, the first question when you make that is, hey, how much exposure did you have to reach that amount of percentage? And that exposure will most likely be very high. The more exposure you have to investors' capital, the more risk it is for them, essentially. Every time you open up a trade, it's a risk for them. It's a risk. So that's very important to understand. So no volatile equity curve. So steady, no crazy drawdown. 5% drawdown, that's already quite volatile in a singular month. Then maybe 1 to 2% steady every single month. That's investors. That's what investors want to see. So if you open up a Darwin X account, again, it's not that interesting for people to see 100% made in 1 month. Then we go back to 10% drawdown. Then we go this and that. That's really not that interesting. That's not what they are looking for. The first rule in trading investors' capital is protecting the capital at all costs. That's arguably the first rule. Exactly. My advice, don't buy too many contacts. Only trade one or two a day. Yes, very true. And I would argue if you're just starting out, maybe just look at 1 trade a day. Limit yourself to 1 trade a day. That's about it. Hi, I'm stuck with 2 mentors. Oh, oy, oy, oy. And my bad is I don't want to leave any. And you always say, keep 1 mentor. You have to choose for me, my friend. No. All right, let's look at this from a logical perspective. It's actually a really interesting question. I like that. Which one resonates more with you would be my first question. Which one have you learned from more so far? Which one are you potentially more accessible to? I also think that is quite important. Those are questions you can ask yourself. Is it always bad to have 2 mentors? No, because you might have a technical mentor and you might have a psychology mentor. For example, I believe I am not the best psychology mentor out there. I have experience from trading, etc., but I am not the best psychology mentor out there. There's better psychology mentors out there than me. So if you have a technical mentor, which could be me, and you have a psychology mentor, which could be someone else, that's perfectly fine. As long as the 2 mentors are not contradicting each other. That's very dangerous, because if you have, for example, me telling you, you need to focus on these fair value gaps right here and focus on that fair value area and do this, do that. And you have someone else telling you, well, don't do that and do this and do the opposite essentially. Yeah, that's very dangerous. That's not going to get anywhere. So yeah, decision is up to you, my friend. Decision is up to you. And whatever you choose, that's the best choice, my friend. That is the best choice. Your choice is the best choice because that's what resonates with you. What's good, Ara? I'm doing good. Doing good. Thank you. Doing great. Had some food poisoning actually earlier this week, which was quite interesting. But other than that, I'm doing great. I'm happy I recovered quick. Yeah. Let's see. If you don't mind, how much money did you take last year from trading alone? I can't disclose that, my friend. I'm sorry. Even if it was about any sort of money. Even sometimes I also see the question, are you a millionaire? I can't say that. It's purely because I put myself in danger. As in, the more subscribers you get, the more followers you get, the more people know where you live. It does not end well. Let's put it that way. I can't disclose that, my friend. I make zero money from anything. I just have zero money. There's zero. Let's put it that way. It's the best thing for everyone to know. Your face tells us you're a millionaire. Thank you, I guess. Yeah. Thank you. Yeah, no, I can't disclose that, my friend. Yes, every live stream is just posted on YouTube. As in, not on the videos tab, but if you go to the live tab, live streams, I'm not sure what it's called, that's where it is. A book map. I'm not sure what you mean with a book map, my friends. A book map, indispensable. I'm not too sure, my friend. I'm not too sure. When will you start your Signal channel? No, I won't start. I had some ideas, if it's about something similar to that, but no, I won't start that. Essentially, what you're doing with signals is you're not helping people. It might seem on the short term you might help someone, but in the long term you're not actually doing them good. You're not helping them in the long term. You're becoming reliant on someone, which is dangerous. Very dangerous. How can we journal trades better, not boring way? That's a really good one as well. Again, with everything you do in trading, I would argue it's quite important to not have a long list of things that you need to do. For example, if you have a trading plan and you need to read 20 sentences, a whole book, a whole chapter of a book before you can dive into the market, no one is going to do that. Let's be honest. No one is just going to do that. So mainly 2 questions. Journaling is mainly about 2 things. It is about, okay, was there anything I can improve on the technical side and the psychology side? That's about it. And that is that already then starts off a chain reaction of questions that you might have about, okay, what can I do better here and there? And that's enough. That's enough, essentially. When you play basketball, did you run the point like you run candle signs offense? A little bit, yeah, mainly point, but it depends on what kind of team. As in, I grew up quite small. I was quite small, and when I was older, around 15, 16, all of a sudden I grew a lot. So I had the skills of a point guard, shooting guard. I was mainly known for shooting, and that carried over when I was taller as well. So I could do a little bit of everything. So in Italy, for example, when I was in a youth team, I also played bigger positions because I was quite tall. what to do as a 16 years old trader. Ask yourself if trading is really what you want to do. And if it's really what you want to do, then stick to it for the next years. And when you stick to it for the next year, stick to also one mentor, stick to one understanding of price action, stick to one concept, essentially. And other than that, give it time. You're 16 years old, my friend. That is insane. So with time, you will get there. You will get there. You will get there. As long as you follow the right steps. That's very important. So find the right mentor as well. Don't fall, because that's mainly the 16 years old, 16 years old, 14 years old, whatever it may be. Young people usually fall for money and fall for, hey, this guy who's selling me signals has a nice house and has nice cars and nice watches. That's usually not the people you want to follow. Follow people for their value, not for the stuff they have. Oh, no. It's not something I do on purpose, actually. It's just maybe a little bit better to do like this. The names right there, the ticker names. No, it's not something I do on purpose. Not my intention. Any psychology mentor suggesting? Yes, there's one out there. Well, two actually. I forgot one name. I'm sorry. I forgot one name, but I'm not sure what his name is. It's a bit of a shame. But there's also one on Twitter. Wow, that guy's so amazing. I think he's the performance coach of Funded Next, and his Twitter is Trading in the Now, something like this. I follow him. Yeah, Trading in the Now. That's a really good psychology coach. Really, I love his tweets. Love it. All right, I've seen your stats online. You're a baller. I'm trying to 1v1 at my course for 5K. I would have to practice a little bit. I've not touched the basketball in a long time, which I would love to again. I would love to. Do you have a FIP group? Yes, the MMT. Yes. Millionaires have extreme discipline. Discipline is hard to achieve. Yes, true. It all starts with motivation, but afterwards, discipline comes from habits. So habits is essentially starting small. When you say you're going to do something, actually start doing it, because every time you don't do it, it's going to be a mental defeat, and that's how an endless cycle of procrastination starts. So it can be as small as, for example, I have something, I walk out of the room right there, and I remind myself, hey, actually I need to take that glass. If I walk out of the room, I go upstairs, I go about my day right there, and I do not take that glass, even after thinking of it, that's bad, because then bad habits start to kick in, essentially. But if I remind myself, oh, I need to take a class, and I just do it, small thing, but it's very important, and I just do it, then good habits start to build. And that's very small. Even doing a cold shower, for example, not necessarily for the benefits for that, but it's a small habit where you don't like to do it. That's when you do it anyway. And then you'll see it's a lot simpler to also start journaling, and it becomes a habit, etc. Very important. Very important. Messi or Ronaldo? I think Messi is the more talented person. I think Ronaldo is the hardest worker in the room. So I think Ronaldo had to deal with less talent, but Messi is overall the talented footballer, in my opinion. You're needed in the NBA, Atlanta Hawks. The Atlanta Hawks could use some help. I thought they would be better, but it is what it is. Twitter's trading in the now. Trading in the now. Let me see. Trading in the now. Something like that. I'm not sure the exact name. You also have Pat Buali, I believe. Pat Buali on YouTube. Quite a small YouTuber, but lots of value as well. Lots of value. Pat Buali. Yes. I believe you write that like this. I'm not too sure. Not 100% sure. Not 100% sure. It's in the chat right there. Yeah, it's this one. Coach Sanjeev Sangar. I'm not sure if I pronounced it correctly, but that's the one. Yes, trading in now. That's the one. Yeah, exactly. Hope. Sorry, I missed the link. That's it. Hope sent the link. If you scroll up in the chat, that's the one. Trading in the now. And also Pat Buali, he has I have to describe him by the way he looks. He has, I believe, something like curls or something. He's a bit light skin. That's it. Can I hate you? Love you. God bless you, Ari. God bless you too, my friend. How to become full-time trader if you lose 3 years. What is your advice? Well, my first advice is to not lose anymore. So how can we go about not losing anymore before we even decide to go full-time? Do you have something? Well, my first question would be, what are the concepts that you've been using? And what are concepts that you have been using that actually have worked in the past? What are the concepts that resonates with you? Because we first need to find something that we can actually stick to. Because losing 3 years does not happen just like that, right? There's something going on right there. So that's what we first need to find out. And when we find that out, then we can stick to the concept. We can learn from the mistake that we make. And then essentially it's just an upwards curve from there. It's just learning. That's about it. That's the first thing we have to do. A-book and B-book is misunderstood. I think, as far as I understood, A-booking means that the broker takes other side of your position and doesn't hedge it. But B-booking is with hedging. Yeah, so in prop firm, it's not always the case. When we refer to B-booking in prop firms, you have a B-booking where you're on one extreme, you're getting hedged again, so you take opposing positions. You have A-booking where you essentially, A-booking is always you copy the exact trades, depends on the risk, etc., things like that. And you have the middle, which is still called B-booking. B-booking does not always have to be I'm hedging against your position. For example, prop firms, when you open an account, B-booking does not happen at the beginning. It's just neutral. Nothing happens. You're not getting A-booked, you're not getting B-booked. And you're getting B-booked because you're not getting copied essentially, but you're also not getting hedged against. So that's important. Unless, and there have been prop firms in the past which do B-book you from the start, which actually go fully against you. And then there's a conflict of interest. That's the dangerous part. But just B-booking neutral, where prop firms don't necessarily hedge against you, that's not necessarily a bad thing. You said $1 million account holder don't trade on 1M, and you also don't trade on 1M, which means you're a millionaire. I like the theory. I like the conspiracy theory right there. That's very good. It's very good. I've studied much, but not yet started trading. Start trading, my friend. Start trading. Sooner or later, and even in the learning process, you learn the most from just opening up a live trade. That's where you learn the most. So you can watch all the videos right here on YouTube on my account, but you will always learn more from your own experience in the chart. Your channel is growing really fast. Thank you. Appreciate that. Thank you. As long as we can provide the value, that's the most important part. Because a channel can grow fast and I can flex with a lot of things, but it doesn't really mean anything if there's no value in it. Love that. I'll share your knowledge in South Africa when I'm consistently profitable and will come back to you with proof. Please remember my name or this. Love that. I don't know how to pronounce your name, but I will remember it. I will. Do you trade crypto? If yes, do you trade other assets except Bitcoin? Not really, to be honest. I'm not actively looking at Bitcoin. I used to when we were below an all-time high. Here and there, invest something. So just put some money in, etc. to ride towards an all-time high. Or take a trade, something like that. But other than that, no, not really. And I don't have any money in crypto right now. No. I'm not the best at crypto. I used to lose a lot in crypto because I don't know. I'm just quite a rookie when it comes to the blockchain, things like that. It's just not my cup of tea, not my thing. Just not really good at it. How to learn Dutch? Is it look like Germany? It's close to Germany, but it's not the same. There's quite a well, as a Dutch person, I would say there's quite a big difference. But as an outsider, you might say, well, it sounds very similar, etc. Things like that. It's close to Germany, close to German, yes, but not fully the same. Not fully the same. If you come from a German background, then it might be easier to learn, though. For other people, for Hispanic people, for example, even, well, I would argue everywhere around the world, it's quite hard to learn Dutch. We have very specific pronunciations. Like the G is very hard to say for certain people. Thank you, Ozzy. Thank you. Yeah. The true, I learned sniper entry with your concept and I learned from myself. Yeah, that's perfect. That is absolutely perfect. That's absolutely perfect. Why Dutch are so tall? Yeah, I always hear it's the milk, it's things like that. It's to keep us above sea level when the water comes in. No, but I also saw a theory, very interesting actually, that it's about evolution, as in tall people, again, no shot at anyone else, but it's in general they are found to be more attractive, so they might mate more essentially, and if you constantly mate with tall person, then you create new tall persons essentially, and that cycle continues. That's quite interesting. Don't let that discourage you though, small people. Do you also know about Bank Nifty? I don't know a lot about Bank Nifty, but I do always do a Bank Nifty analysis. It's on the list right there. So every forecast, even in the MMT as well, I always look at Bank Nifty as well. For sure. Some advice on derivative indices. I am not 100% sure what that exactly is. I heard about it quite some time. I heard about it quite often as well. I'm not 100% sure what it is exactly. But if I think what it is, then I think you should not trade it. And what I mean by that is, if it's a market that's not actually backed by something, so it's made up essentially. I believe it's something as well as synthetic shares or something. No, that's not the right thing. I'm confusing a few things together. But if it's what I think it is and it's just a made up chart by some kind of website, then don't trade it. Don't trade it. Because then the chance that they might manipulate price action or do something else is just, well, that's undeniable. That's going to, inevitable. It's going to happen. Well, looking at F1, Dutch Anthem is very easy to learn. Yeah, thank you, Max. Thank you. You put the Netherlands on the map. Are you a full-time trader? Well, we could argue it all starts with trading for me. So full-time, yes, because if I don't trade, then I'm not a good mentor anymore, in my opinion, because I don't have the experience anymore, etc., to talk about it. I'm out of touch with, for example, the prop firm as well. So it all starts with trading. And full-time trading oftentimes is misunderstood, because full-time trading is not looking at the chart 8 hours a day. It is mainly doing your forecast, keeping everything in check, looking, okay, is there a good trade right there, high probability trade? What's my risk management like? Then executing, which takes maybe maximum 30 minutes, maybe maximum 1 hour a day. Is trading news really exist? Not 50-50. Well, the thing is, trading news, and listen to the whole story before you draw your conclusions. Trading news oftentimes follows the higher time frame narrative. So whatever is bound to happen is going to happen, just accelerated by news events. That's very important. So for example, this move lower right here, what we saw on NFP, we already saw that coming somehow, because we had this fair value area not getting respected to continue lower. This was already target. NFP just speeds up their process. So it's quite predictable. But here the thing comes, here the less nice thing comes, is if news is quite predictable, can we trade it? Well, only if we are correct almost 100% of the time. Unless we are talking about daily entries, for example, then it's not too bad, because you might not get crazy slippage. But if we're talking about a 5-minute trade, a 1-minute trade at the release of NFP, then we might be accurate sometimes right there. But other times, if it goes against us, we might blow an account right there. So the RR, the risk management, is overall not in our favor. So that's why it's risky, essentially. You can do it, yes, but over the long term, it's not that profitable. It's not the best trading strategy that you can have, essentially. That's why it's tricky. Let's see. On 100k account, max drawdown is 10%, so you risk 1% on 10k or 100k. 100k. Always use the 100k in my opinion. You can do the 10k, but it's going to take you very long to pass that account. And it's when you still use 100k and 1% of 100k, then what you can do is still use boundaries. So after 4% drawdown, for example, drop down to 0 to 5%. And still, even by using that, there's a very slim chance, if you have good risk management, that you actually blow the account within a certain time. So yeah. When it comes to case studies, should I focus on getting them from live only? No, you don't have to do that. Case studies is a specific example where you can still use hindsight backtesting, but only hindsight backtesting. So not using the replay tool right there. That's quite important. And after hindsight backtesting, you can tape read. So you can look at live price action and tape read, which is essentially not doing anything, no demo trading, no live trading, just looking at price action while it's forming. And after that, you can go into live trading. Order block coming out of a previous order block, do you consider it high probability? It's a repulsion block, I believe. And for me, I don't really look at it, to be honest. Don't really look at it. So I can't really say if it's very high probability or low probability. I'm not 100% sure. We're happy to have you, bro. I'm happy to hear that. Thank you. I appreciate that a lot. Thank you. How to increase my win rate? Oftentimes, win rate propulsion block. That's the one, yeah. How to increase my win rate? Oftentimes, win rate gets increased by taking less trades and more high probability trades. Might sound straightforward, quite straightforward, quite logical, but a lot of patience comes with it. Finding what the highest probability conditions actually are. Sitting on your hands a lot, so it's a lot of waiting, essentially. Being very picky about your price action, and that way you can increase your win rate. Taking less trades is oftentimes the answer in that. Less of the losing trades, which again is quite logical, but we can achieve that through the things mentioned. How and when we really approach funding account, like when we start funding account, sorry for a second time. When we start funding account, after you have gone through material, so essentially it's as soon as possible. Essentially, that's the goal, to go for a funded account. And so as we learn, essentially, as you learn about certain concepts and studying them, maybe in hindsight backtesting, like I mentioned, then the tape reading, and afterwards, as soon as possible, ideally going for a funded account, and not necessarily because we know we're going to succeed. No, because that's where we're going to learn the most. Because we are going to lose, most likely, at first. I'm not sure if I can say that. Can you greet my friend from Poland? I'm not sure if that's a crazy word. I always have to be a little bit careful about that. If I'm not saying something crazy in Polish. Before it's all over the internet. What do you think about inverse value gap? Arguably the most useless PD rate there is. it's like inverse, and it's again, it's nothing against no one or anything. If you use inverse value gaps, you're profitable with it. That's perfectly fine. But I think it's like you have fair value gaps understanding, and when you understand fair value gaps, you also understand inverse fair value gaps. When you understand inverse fair value gaps, then you don't really understand fair value gaps, truly. So to give you an example, when we respect fair value gaps, or when we respect inverse fair value gaps, we are usually just coming into something that's on the right side of the chart. When we disrespect an inverse fair value gap or something like that, that's usually just disrespecting a normal fair value gap, which of course is also an inverse fair value gap. But that can be seen by fair value gaps on the right side of the chart. So by just looking at fair value gaps, you have inverse fair value gaps incorporated into your trading plan by not looking at inverse fair value gaps. So to me, it's one of the, it's I don't know, to me it's such a weird concept. It's very, very useless in my opinion. It's one of the concepts that's arguably just really not that great. Really not that great. It loses a lot of accuracy, because if we mark out every single inverse fair value gap right there, we will always have a reason to do something. And there will always be a support or resistance. And it just turns into what we did not want to, which is essentially support and resistance, where we always have a reason to do something. Same if I place this line right there. Then right here, we see, oh, we have some support right there. Look, perfect support right there. Same as inverse value gaps. So inverse value gaps don't really make the most sense to me. But again, that's me. If it works for you, then I'm happy for you. Do you think that in summer, due to it being summer, there's more choppy price action, we should risk less? Or do you think it's business as usual? Depends. We can't say that upfront, as in there's a stereotype. Similar to, what is it again? It's seasonalities. Similar to seasonalities, there's a stereotype because, and the reason there's a stereotype is because overall in previous price action, in previous summers, there was less nice price action, more choppy price action. Does not mean every summer will be like that, of course. So we still have to see it. We have to see it for ourselves. It's good if you have been trading for a few years to already drop your risks. That is what I do. I already drop my risk in the summer. Usually why we have choppy price action is also because we have a lack of news in summer. So that's why we have more choppy price action. Tend to have more choppy price action again. The probabilities. It's all about probabilities. Happy birthday, Wade. You're very pretty. Oy, 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 oy. Let's see. A false breaker. I'm not too sure, my friend, what a false breaker is. A false breaker. It seems like a coping mechanism or something. A false breaker. I have no idea what that is, to be honest. Your favorite two PD rays. Swing high, swing lows for value gaps. Swing points and for value gaps. That's it. Swing points and for value gaps. Do kill zones is really a thing to consider while analyzing or only take entry on that zones? Depends on time frames. If you're talking about 5-minute and 1-minute entries, yes, take into account kill zones and only look for trades inside that kill zone, for example. If we're talking about 15-minute entries, 1 hour and above, you don't need to worry about kill zones. Sometimes flex your cars. No. 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 Yeah, I was about to say, I'm already 2 hours live, actually. Already 2 hours live. That's time flew by. MMT versus YouTube, what's the difference? YouTube is concepts on its own. It's usually the tip of the iceberg of what we explain in concepts. For example, candle signs goes a lot deeper into it as well. Same for value gaps, same for order flow, goes a lot deeper in the MMT. You have a community in the MMT that is more efficient. So it's more time orientated. What I mean by that is there's a clear guide. We should do this, then we reach profitability. YouTube is, here we have a video about risk management. All of a sudden we have a video about narrative. All of a sudden we have a video about this. It's less organized in that sense. YouTube can be enough. MMT is just a luxury. As in MMT is just more efficient, more information. That's about it. So MMT, there's for example, one concept is, well, actually we discussed it in this video, is breakaway gaps where they form even more in depth than the video on YouTube. Dominoes effect, 2-candle rejection actually as well. Things like that. Order flow, ST plus re, things like that we don't really go over on the YouTube. Let me see, my friend. Monthly, weekly higher, 4-hour entry, monthly, daily higher, 1-hour entry, monthly, weekly higher, 4-hour, medium, 15-minute, monthly. Okay. Stop down for swinging in. Yeah, that looks good. Yeah, looks good. Is intraday profile is needed to analyze on 15-minute time frame? No. Where intraday profiles are based around higher time frame PD rates. So if we, for example, continue lower of a certain higher time frame PD rate, that's where the intraday profile will form. So we have London creating the high of the day right there because we have a daily PD rate, for example, that we sting into to then continue lower off of. So yeah, that's very important. Do you touch on a similar concept like candle range theory in MMT? I have no idea what that is, my friend. I can't judge. I don't know what it is. I heard some people mention as well that they somewhat copied candle signs and just named it differently, but I have no idea. I have no idea. I don't know what it is, so I can't judge. I can't judge. But no, based off that, we don't go over that in MMT. No. Love to hear that, Adrian. Love to hear that. Thank you, thank you. Thank you for saying that. Thank you. I appreciate that. Thank you. We can see all things about your ideas with your backtesting, or you can make a backtesting video. I don't backtest. I don't backtest. And I always advise as well, don't backtest, because I think backtesting is very detrimental for quite some things. So I always advise against backtesting, actually. So I'm not going to go against my own advice. That would be a little bit weird. So I don't backtest. I don't backtest. I think it's quite useless to do. It is candle signs, stole your respect and disrespect concepts. It is what it is. What can I say? What can I say? You know, it's quite funny, you know, because, well, at least me, I saw it coming. As in, it's not that crazy. With order flow, the way we introduced fair value gaps, the way we got to candle signs, sharp turns, etc. And look what happened. We made a revolution come true. And we talked about it before it even happened. So yeah, all we can say is nice. It clearly works. Nice. Let's see. When can I move my stop loss to break even? When there's no reason to return anymore, which is also based on fair value gaps, on understanding the P rates, etc. For example, if you have a breakaway gap, you can go break even because there's no reason to return anymore. If we do return, then it's low probability. So that's the main question. Do we have no reason to return anymore? That's it. What strategy do you use? SMC? The basis is, well, how do I explain this clearly? I'll sketch you the idea of how I learned it as well. So at the end of, let's say, well, maybe at the beginning of 2022, I was still watching ICT. I watched some ICT content. I wasn't in a private mentorship or anything like that. I was just watching ICT on YouTube, essentially. So core content, 2022 ICT mentorship. That's what I watched. And after that, I decided, you know what? I think it's, well, there's a whole reasoning behind that as well. But I need to stop studying other people. I need to study for myself. So then eventually I got to the understanding of, for example, a sharp turn. I got to understanding of how fair value gaps are more in depth than what they seem. I got to an understanding of candle signs purely from my own experience, from my own case studies, from my own trading. And that basis is laid by understanding terminologies like a fair value gap, for example, which was through ICT. So we could argue it's based on ICT, but I would like to call it as well a mix with MMC, money-making concepts, which is essentially the DLC, the expansion pack on ICT. Quite funny. Yeah. Can we get ourselves involved before the respect candle closes? Well, think about what a respect candle is. On the higher time frame, it's a respect candle. On the lower time frame, it's order flow. It's fair value gaps already. So yes, you can. If you find the right confirmation on the lower time frame inside a candle, you can already read the respect candle before it actually closes. So yes. Do you think 16 years old is a good age to start? Since I'm watching your videos, I improve so much. I think 16 years old is a really good age to start as well. It's going to be difficult, but you have the best aspect in the world and you have time on your side. So yes, it's a really good age to start. In your recent screen, where's the recent breaker block? This right here is the most recent breaker block right there. But I'm 13 and I've covered 50% of ICT already. Well, the 13. That's insane. That's pretty insane. 13. I don't know what I was doing at 13. I think I was playing some Fortnite or Call of Duty. Some Fortnite or Call of Duty. The MT is quite expensive. Yes. But it's worth it. As in, if we look at the statistics, that's why it can be so expensive, is people, when they come into the MMT, I shared that recently, where they make around 13,000 in total profits from the prop firms as well. So that's, what is it? Even if you go for a lifetime, that's 5 times the investment that you make. That's business. That's business. You get more money than what you put in. And there will also, by the way, because right now it's quite high entry, there will also be lower entries as well. And that is with the relaunch, for sure, for sure. They will return. I can hear the Dutch accent from 5 miles away. You know, I thought I was hiding it pretty well over time, but no. The Dutchies never fail to recognize the other Dutchies. It's funny, you know, when you walk in a different country, just not even by the words you hear, but just by the tone someone is talking, you can just hear if someone is Dutch or not. It's very funny. Love that, Haley. Love that. My pleasure. I knew Ari was a gamer. Not anymore. Not anymore. I don't really have anything other to do when I was in, well, it was mainly basketball, school, and then just playing games with friends or going out to friends or something like that. Yes, Jonathan. Yes. Ario is my real name. Yes. Ario is my real name. Yes, correct. Yes, Jonathan. Yes. Yeah. As in, I did say that. Yes. Of course, there were some doubts. My mom was mainly the one trusting me and told me, okay, here you have some time. Doesn't work out. We have the plan B and you're going to follow our rules, essentially. But yes, I did do that. Yes. What does Ario mean? I have no idea. I thought it meant something like black in, I'm not sure actually. It was something like Italian, but the Italians might think, what are you talking about, man? Well, that's what I read one time on the internet. Who knows? It doesn't have a specific meaning. At least wasn't my parents' intention to name it with a specific meaning. Black. Weirdo. Ay. Can you please tell why price tend to tap in fair value? What's the science behind it? Well, there's theories, right? Depending on what type of theory you use, there's a whole lot of arguments that you can use. For example, if you want to look at it from a liquidity theory, then a liquidity theory could be on the lower time frame right there. If we tap into that fair value gap right there, there's actually liquidity right there. So fair value gaps are also known a lot of times as liquidity areas, because here we can sweep this liquidity, which is a sting, into a fair value gap essentially to then continue lower. There's also the theory I like to use is this one essentially. It's very similar. Also from a fair value standpoint. So why is it called a fair value gap? And the reason why it's called a fair value gap is because price moved too fast there. So at this moment in time, price only gave a chance to sellers to get involved right there, not to buyers. So to offer fair value in the market, because the market is based around fair value, offering fair value, it retraces back into that right there to then continue lower right there. And we can even use a supply and demand theory. So from a supply and demand theory, they call it an imbalance, for example, an imbalance in price action. And imbalance because, again, same theory, price went too fast right there, so it needs to fill the imbalance right there from a supply and demand perspective to then continue lower. There's a whole lot of different theories. Which one is the right one? Who knows? You choose and stick to that one. I like to use the liquidity and the offering fair value behind it. Okay, say something in Spanish. Hola. Hola. What do you want me to say, my friend? Don't do anything too difficult. Ario is like a cornstarch brand or something in the US. Oh, really? I thought I saw as well. Ario is, if you Google Ario, it's actually as well a hospital brand. I think it's a hospital supplier. Quite funny. Quite funny. Dutch people are Christian or Muslim? Yes, I would argue most. Yeah. Atheists as well, a lot of atheists. Why are you not replying to me? Which one? Let me see, my friend. Which one? I can't find your thing. I can't find it. Do you trade futures? Not really anymore. I had it for a short time, but not really. I would like to get back into it though. But I currently just want to focus on the higher time frame. Suits my style right now more. What's the idea behind 1 to 2? Why don't you let your trade run to your final take profit? Well, I've used the theory behind the 1 to 2 is because if we use a context area like this, for example, and we go into the lower time frame, then if we always expect our trade to run towards the context low, so the first target right there, it will not always reach that. So as a general rule of thumb, the higher the RR, the lower the win rate. The higher the win rate, the lower the RR, essentially. I always wanted to have a perfect combination of that. So I also had times where I was targeting very high RR with a low win rate, which you take a lot of psychology hits, a lot of punches before you get that next winner. Can you survive all those punches before you take the next winner? That's a low win rate. So this is a perfect balance for me between high win rate and also just decent RR for me. And here we only need a rejection, for example, 1 to 2. I don't need this 4-hour value gap to create a new 4-hour value gap to all the way continue lower right there. I just need it to reject, and it's already a 1 to 2 right there. So that's why I like it. That's why I like it. That's the theory behind it, essentially. It's the perfect balance. Perfect balance. I'm asking time frame alignment if we are executing in a 1 minute, 5 minute time frame. 1 minute, focus on 15 minute PD rates, narrative areas. If we are talking about 5 minutes, 5 minute time frame execution, entry time frames, then we are talking about what is it? 4 hour or 1 hour even. So to write that down actually is more clear. If we're talking about 4 hour, then focus on 5 minutes, for example, double confirmation. If we talk about 1 hour, we can also look at 5 minutes, but it's less confirmation that you need. If we're talking about 15 minutes, we can also look at the 1 minute. 1 hour, you can look at the 1 minute as well, but just know you need more confirmation. So the further the time frames are apart from each other, the more confirmation you're going to need. In the form of the more lags with fair value gaps, for example, you're going to need. Sometimes I do trade on the 1 minute, sometimes, but currently no. But yes, it is very doable. It is very doable. 100%, 100%, for sure, for sure. Can we have a sneak peek of the MMT, please? How you explain setups, signals, or any, so I can decide to join or not. There's no signals, so let me get that out of the way as well. There's no signals. I don't share anything where you can capitalize on that or indirectly or not capitalize and lose money on it. But I offer you something better. I offer you reliability on your own, sustainability essentially, and not being reliant on me. And that is very important because that's when we do have signals, you rely on me. I want you to come into the MMT, learn about it, and you can decide whether you want to keep on being in the MT or leave it. But either way, you're going to be profitable. Either way, you're going to make money from your own knowledge right there. That's very important. So we start off with an introduction. Then we have, for example, currently in the masterclass, there's spring enrollment. You have an advanced enrollment, foundational enrollment as well, which is a little bit easier going. Then you have FAG enrollment. There will be a whole lot of different enrollments. You have a support team in the Discord as well, which just help answering questions, etc. Actively helping essentially. The structure is very clear in the MMT, so that's also what I emphasize on the most, I would argue, is there's a clear structure. So we start with this concept. We start in the endless month. Then we move on to the execution month. We move on to the psychology MP month. We move on to the finishing touch month. And afterwards, you just have the step-by-step guide on how to reach profitability, essentially. And extra concepts, things like that. How to analyze stocks. I'm not able to do it because of gap up, gap down. If there's a lot of gaps on your chart, for example, Bank Nifty. I'll use Bank Nifty as an example. On a daily right here. Then what you can do is you can use the indicators, no gaps candles right there by Echepata or something. I'm not too sure. And right there, it will remove the gaps and it will create them fair value gaps. So now what we're doing is we're just simply looking at fair value gaps instead. And then we use those gaps as understanding, oh, those are just fair value gaps, essentially. If that makes sense. And for more information, by the way, Nick, you can also reach out to info@ario.io. I can explain it there better. What is your win rate? Speaking about probabilities. It depends from month to month. My usual aim and my usual win rate on the average seen is about 80%. 80%. But I also have months where it's a lot lower. So for example, May, my win rate was way below that. Okay, Kartik. All right. The difference in risk management for 10K, 50K is no real difference because you base it on percentages. So both start off with 1% essentially. So it's all based on percentages. So it's all the same essentially. I think I've heard about that actually. Norali Schoenmaker, Ario. I think I've heard about that one actually. I think I might know where it is even. But I think I might have been there before actually, but yeah. If I know which one you're talking about. 30% win rate with RR 1 to 3 or 50% win rate with RR 1 to 2. I would say 50% win rate with RR 1 to 2. And the main reason why that is, if we talk about 10 trade period, then we can potentially have 7 losses in a row with a 30% win rate. Where those 7 losses right there, yes, of course, we end up being profitable potentially, but the thing is, can you survive those hits and not do something crazy like overtrading, revenge trading before you actually take winners right there? So that's something you need to take into account right there. The best strategy to use for a prop firm challenge is simply risk management. So not blowing the account. That's what it all starts with. And afterwards, it's quite straightforward. Have you ever met your subscribers? Well, there's some Dutch people that I have met, which I know are also following along with some of the content, etc. So yes. But specifically a subscriber, no. It's not like I arrange a meetup with subscribers or anything. All right, perfect in Ari's voice. Yeah. I'm also going to say, all right, perfect, because I'm going to end it here. All right, perfect. Thank you, everyone. Thank you, everyone, for being here. Thank you all for the great questions as well. Thank you. I really appreciate that. And I'll see everyone at the next one as well, which is again Saturday. Saturday, which will be about entry confirmations, when to have the proper confirmation, the best confirmation, the when to require more confirmation, essentially, will be quite interesting. And then afterwards, we have this, the forecast, of course, again. All right, perfect. Thank you, everyone. Thank you. Have a great weekend, rest of your weekend, or if it's already Monday for you, then have a great start of the week as well. And remember what we talked about in the charts. Very important.